Welcome to this special edition of the WTR Small-Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-Founder and Chief Marketing Officer of Water Tower Research. In today's episode, I'm being joined by my colleague and the Managing Director in our energy practice, Chris Degner, to discuss several topics in oil and natural gas markets. Chris, you have such a unique background that is highly tailored to your current role. After we kick things off, please remind our audience of your professional background.
Well, thank you, Tim. I think this is my second podcast now that I've done, and somehow it shows up on my Spotify feed next to Joe Rogan, The Economist, and Who's Your Daddy. I'd like to share this one with my mom, so I think we'll have to watch our language as we go through this. As a background, I've worked in investment banking and investor relations in the energy industry for about 20 years for Occidental Petroleum, UBS, Chevron, and now Water Tower Research. We cover a variety of conventional oil and gas clients and also renewable energy ones. And with the recent turmoil in the Middle East, and as well as the new legislation out of Washington, I think there's been a lot of topics that we can sort through. So
that'd be great. How about if you elaborate on that point, Chris, and let me know what surprised you and what do you think the markets might have missed in all the data and noise?
Well, I think the market structure for oil and also liquefied natural gas (LNG) has changed dramatically in the past 2 to 3 years. There's the oil markets are very well supplied with OPEC production growth that's gone from roughly 400,000 barrels a day to 800,000 barrels a day, and coming online in September, and it's really served as a cushion and kind of insurance policy for the global markets, and I think oil prices have been arguably deflationary, and in the U.S. As we've been through a variety of conferences and chatted with our clients and the industry, it looks like drilling plans are going to decline by roughly 5 to 10%, and roughly around $65 a barrel of oil are at kind of an inflection point where producers can make a return on their cost of capital that's fair, and then consumers can benefit as well. So
great. So you mentioned the market structure seems to have changed, Chris. Can you play that thought out a bit for us?
Well, for sure. So I think from 2014 to 2021 or 2022, most of the marginal supply in the oil market was delivered from shale production out of Texas and in the Permian Basin. I think that's changed. A lot of their inventory is for drilling locations has declined a bit and not as optimal that it had been. And additionally, I think that there's another 500 to 800,000 barrels a day of production coming online in Saudi Arabia and the UAE, as well as there's a huge project offshore in Guyana that should probably add another 300 to 500,000 barrels a day. So if you look at the traditional supply, demand growth for oil around the world, it's typically about 1.5 to 2 million barrels a day a year, and it's being supplied now by other parties and companies that are outside of the U.S. And so it's a shift in market structure, and additionally, I think there's been a large amount of development in the LNG industry with projects coming online that will change that market dramatically. So.
Great. The beauty of this podcast format is we have the ability to jump around a bit, and I'm going to do just that because you mentioned LNG. So I'm really curious to have you speak a bit about the LNG markets, please.
Okay, thank you. If you look back to the recent conflict in the Middle East, roughly 20 to 25% of LNG supplies come from Qatar and through the Straits of Hormuz and are exported to Europe and China and Japan. It's a growing industry, and I think a lot of diversity of supplies coming online. Specifically, there's the U.S. industry have added on. Sorry, I need a break. Anyway, so the U.S. industry has added on export projects in Louisiana through Plaquemines, which is owned by Venture Global. They've done an IPO in the first quarter of this year and are exporting roughly like 10 million tons per day of LNG. Additionally, ADNOC, which is the national oil company out of Abu Dhabi, has acquired Santos in Australia. It still needs to go through local regulatory approvals and from the government there. It's a roughly $20 billion acquisition and will be focused mostly on natural gas production that can be exported to China, Malaysia, and Japan, and a pretty effective cost. Additionally, there's been an IPO in the United States for a company called Tamboran Resources, which is based in Australia in the Northern Territory. They have put together a 2 billion acre position with a shale formation that looks geologically comparable to what we have in the U.S. in the Marcellus Shale and Haynesville Shale. It looks to be 15 to 20 TCF of resources, and I think arguably the second or third largest natural gas shale play in the world. Their partners are pretty fascinating. It's on the drilling side, it's with Helmerich and Payne, and on the completion side, it's with Liberty Energy, who've both of them have been on the forefront of innovation and creating the natural gas supply growth that we've seen here in the U.S. And I think ADNOC, which is acquiring Santos down there in Australia, could be a natural partner for them. They need to build an 800-mile pipeline down to Sydney or south down through Adelaide and Melbourne, and it's I don't know, it's one of the more fascinating management teams and stories that I've seen in the past 10 years, and they've got a lot of opportunity ahead of them and some logical partners where they can both serve the Australian markets and also the Asian markets through exports with LNG. They're also a small cap company and traded on the NYSE. They did an IPO about in the first quarter of this year, and their stock ticker is TBN, and roughly a market cap of 400 to 500 million, and a, a fascinating growth profile ahead. Sorry.
Okay, so unfortunately, Chris, we're out of time for today, but we most definitely have several topics to continue to pick up on another podcast, including developments in Canada and the missing backlog of exploration. Can't wait to get you back on. This industry is very near and dear to me, having grown up in the shadows of Marathon Petroleum's world headquarters in Findlay, Ohio, where my dad spent 3 decades as a career. Thank you for sharing your oil and gas sector thoughts with us today, Chris Degner, and I look forward to having you back on the podcast soon. Thank you for listening, and don't forget to subscribe as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight Podcast.